of course, the sustainability of our Regulators Forum, a first of its kind on our continent, and a platform of interaction between regulators and innovators in Nigeria, created to enable stakeholders to collaborate and create solutions for balancing innovation and regulation. With these achievements and many more, it's no surprise that our membership is grown to over 250 individuals and corporate members, which represents an annual growth of about 24%. There are many opportunities to leverage in order to achieve unparalleled transformation in the fintech landscape. If you look at some of the stats from Bridge to Bridges in 2021, Africa fintech startups attracted a whopping $4.65 billion in disclosed funding alone, and fintech alone received 62% of that. Nigeria obviously stood out of the pack with a whopping 1.37 billion raised for Nigerian startups, and 73% of that went to fintech alone, and 13.8% to the e-commerce sector. In Africa, Nigeria raised the largest chunk by far, followed by South Africa, Egypt, and Kenya. And outside our big four, the other proactive markets to watch out for included Senegal and Tanzania, whose combined startups raised about 222 million and $6 million respectively. One of the biggest stories in Africa last year is the Ghanaian fintech Cheaper Cash, which raised a total of $250 million. Without Cheaper Cash, though, Ghana would have raised just about 48 million. Why Africa? Obviously, Africa has a large population, most of whom are increasingly mobile, tech savvy, and will provide an immense potential for startups in technology and investors at large as well. Electronic payment transactions continue to grow astronomically by some 50%. If you look at NIPS data, 18.84 trillion in 2020 to 28.1 trillion in 2021. And spending on POS was at an all-time high in Nigeria, showing the massive shift into electronic payments and a decline of physical payments. Despite this growth and opportunities, the industry still faces many challenges to overcome as it continues to thrive. The need to develop and deepen our national talent pool, encourage research and development to get our innovators and startups on a higher plane, foster an environment of supportive regulation to grow the industry, facilitate local investors to participate, and position our startups and innovators to build and develop durable and strategic intellectual properties. After all has been said and done, fintech ecosystem players such as those of us gathered here today wonder, are African fintechs really pulling their weight to command a significant chunk of the 324 billion global fintech market dollars? How can the Nigerian fintech ecosystem leverage the trends in emerging technology to remain at the top, not just in Africa, but start punching out of Africa, our family as well? Let me assure you that Fintech NGR will continue to play its part in addressing these challenges effectively. In the same breath, I'm glad to announce that today we will be launching the Startup Marketplace, an innovative platform for fintech ecosystem, which provides startups playing in the fintech market access to free and heavily discounted services in funding, legal, infrastructure, cybersecurity, data privacy, business development, and a whole plethora of other businesses as well. In closing, joining us today are some of the most innovative, digitally sound tech ecosystem leaders who will be shedding light into the strategic courses of action being taken in their various organizations, as well as their industry outlook for 2022. Together, these panelists will provide insight into how we can tap into the treasures of fintech, deepen our industry knowledge, secure our position in the global fintech market, and how to address the challenges that we face. And I'm sure attendees will benefit immensely. I'm really pleased that we have Odunayo in Quebec with us, and of course my brother Michelle, Premier, who's represented by Femi, Lauren, David, Yinka, Daniel, and Co. Fantastic to have you here. I'm sure that the conference being held today will set the tone for the activities and conversations that will be had all year long as we all strive collectively to position Nigeria and Africa at the top when it comes to fintech-related matters. I wish you a memorable and insightful event. Thank you.
Thank you, sir. So Ahmed, over to you for the startup marketplace.
All right. Dami, do you want to pull up the presentation quickly so that we just show everyone? So just to write on what the president had spoken about, what we've done is basically to build a place where startups can easily freely connect with all the required services they need. So this is a platform that bridges the need that startups have, and also with connect them basically with service providers, be it audit, logistics, financial planning, whatever services they need, and who best to provide it other than a central body, which is Fintech NGR. So we're strategically positioned to connect the entire startup ecosystem to have easy access for startups to have these services provided to them at subsidized or no fees at subsidized rates that providers would be providing. Next slide, please. All right, so part of what we've done is to make it easy. And what happens is many of these startups need to actually belong to the community of Fintech NGR. So what happens is they go on the website, and the website is startupconnect.fintechnGR.org. They make the request there. They have the capability of chatting with the provider pretty easily. The technology that are provided is auto chat, where they can easily interact with the providers. Also have the services provided to them at a very reduced rates. Next slide. For the service provider, they can easily go on the website as well, create a profile for them. So what we looked at when building this website is a very easy, basic user experience. The provider just goes to the website, creates a profile, and they're able to list all the services they provide. And when there's need for their service, it's easy for them to get a notification by email when the services are being requested for. Next slide. Of course, Fintech NGR sits at the center of all of this. And what then happens is the admin is able to monitor the account creation process, also check for activities happening, and eventually, if there are hanky-pankies going on in the system, they have the capability to actually deactivate accounts if necessary. Next slide. All right, so we would implore everyone to jump on this with us, and as we try to make startups, try to make access to services easier for startups and make the community grow. Thank you, everyone.
Thank you, Ahmed. We'll send a video of how it works to everybody who is signed up for this webinar, and as well to all our members. Thank you very much. Over to you, Mr. Deyinka. Please introduce yourself and take over the event.
All right, thank you very much. Thank you very much, Dr. Brima. Thank you, Ade Bajamo, President of Fintech Nigeria. Thank you, Ahmed Odufua, for your presentation as well. It's been exciting for me to listen to Ade, especially. It's always great to hear him and his opinion with respect to what's going on in the fintech space. This morning, my name is Hadi Nkadiemi, and this morning I'm going to be your anchor person at this program. It's my honor and privilege to be here. Obviously, like you know, the objective of this event is to look at the industry, the way it is, and then project forward to 2022, the whole of the year, and look at, from a 360 degrees perspective, what do we expect from the fintech verticals. There are several different dimensions to fintech, and this morning we're going to be looking at some of those verticals and project ahead as to what to expect for 2022, obviously coming from the background of the great achievements of 2021 and the years before that. So this morning, I welcome you again to the FinTech Learning Series 22. Just to let you know that this segment that we're in at the moment, we have the Outlook segment, and there are going to be two, different sessions within this segment. One is to look at the Outlook 1, where we're looking at the segments with respect to payment outlook, infrastructure outlook, wealth outlook. And like Ade said in his opening remarks, we have lined up very seasoned key stakeholders, really, and industry thought leaders, really, to share their perspectives with respect to how they gauge FinTech in 2022. I'm going to just go straight to the program by calling on the managing director, the group managing director of InterSwitch Group, Michel Elegbe, to give us his perspective as an industry thought leader and a visionary that we all know him to be. Michel, welcome.
Thank you.
What are your thoughts about payment outlook for 2022? Obviously, you're looking at, that vertical. Can you please share your projections and thoughts with respect to payments and what we should be, looking out for? Thank you.
Thank you, Yinka. Good morning, everyone. I hope you can hear me loud and clear. I've got a short presentation to use, and if you don't mind, I'd just like to share that down. So, thinking about the fintech space and payment in general, and looking at 2022, something struck me that if you look at the history of payments in Nigeria, it will date back to when perhaps NIPS was first created. And that was roughly in 1994, I think. And that was 28 years ago. And I asked myself, what will the next 28 years be like? Because 2022 appears to be a midpoint between the last 28 years and the next 28 years. And the next 28 years takes us to the year 2050. So I tried to ask myself to think about what this year will be like. What will 2050 be like for Nigeria as a country and Africa as a continent? So in the course of thinking about this, I've tried to understand the role fintech and payments will play in that future and what should be happening now and what I really think is happening now. Some interesting materials were reviewed, mostly work by Google and IFC, and of course PwC. And I'd just like to quickly share briefly one or two slides from those two articles. So the first one basically says that 19 of the top 20 fastest growing countries in the world are in Africa. So when you play the fintech space in Nigeria in 2022, and you hear that 19 out of the top 20 fastest growing countries are on the continent, what does that say to you? When you look at the challenges that we hope to solve with fintech, with payments, what does that really say to us? Now, we take a view that by 28 years from now, some of the countries in Africa could be in the top 20, really, globally, especially when we look at the fact that Africa is growing at the rate of 4% faster than other markets. You get to see that there's a high likelihood that Africa could actually play a very dominant role in the future. And if that is the case, as people who play in fintech today, what kind of responsibility, what kind of solutions, how should we be going about the challenges being faced by the continent. And then, of course, when you take Nigeria specifically, what we have said is that it's a good time to check your VPN connection. What does that mean? There are 3 countries that appear to be playing very critical roles in that future. One is Vietnam, that at 2016 was number 32, but projected to move to number 20 by 2050. There's Philippines, number 28, projected to move to number 19, 20 years from now. And then of course, there's Nigeria, currently at number 22, projected to move to number 14 by 2050. So what does that mean for us as a continent, for us as a country, and what kind of things should we be looking at today in Nigeria? When I look at the rate of payment growth in the country, I come to the conclusion that it will appear that despite all the activities we have done, all the players in the last 28 years, payment penetration is still less than 20%, according to statistics out there, meaning that there's still 80% to go after. Clearly, we do not have the luxury of achieving another 20%, okay, after 28 years, meaning that we have to see some degree of acceleration. And what we have seen in recent times is that a lot of foreign direct investment has been coming into the sector, as Ade mentioned earlier. Will this trend continue? And if this trend will continue, in what areas will we see these foreign direct investments getting into? My view is that a lot of effort went into creating the right infrastructure in what I call the banking and finance sector many years back. And that investment that was made is what we have all developed from. Now, payments in any form requires an entire value chain. And for us to grow, every part of that value chain has to be contributed. So the question is, that 80% that appears to be difficult to get into, where is it coming from? And why is it so difficult? My view is that it is because the right infrastructure has not been created for those sectors, for those verticals. And therefore, the growth we expect to see has not yet been unleashed. And I'll give you a few examples. Take transportation. I'm not talking about Uber, for example. Take the trains, take the roads, and so on and so forth. What kind of payment infrastructure will be required for anybody that gets on a bus, that gets on a train, to transact electronically, and for digital payments to be embedded? Take healthcare. What kind of infrastructure do we need to put in place for payments to really take off in the healthcare sector? Same thing in retail. Same thing in government. My view is that funding has to go into these other sectors for us to see the kind of growth we saw in what today called the fintech space. Now, in looking at this, therefore, what has really happened in fintech space? There have been challenges, and entrepreneurs are willing to try to solve those challenges. In other words, they saw those challenges as opportunities. There's these opportunities that have been sold to investors, and that is what is driving some of the inflow of foreign direct investment that we're seeing. So going forward, I think this will continue. I think as more players come into the space, there will be a need to begin to diversify to other areas, requiring financial technology also, and those areas will continue to grow. And to close that gap, that 80% gap that I've talked about, we need to begin to think about health tech, agri-tech, retail tech, and all the other techs, that if digitized, we can easily embed payments into them, and that growth we expect for the next 80% will most likely come from there. And already in 2022, we can begin to see signs in there. In recent times, there have been announcements of some companies in the health tech space raising some funds. I think just like we saw in traditional fintech, health tech is going to be an area that will take a lot of interest. I also think we'll begin to see some technologies in agriculture. The federal government is putting a lot of effort into agri. The farmers will need some sort of technology, okay, to thrive. And I can see a lot of individuals going to that space in this year to try to solve some of these challenges. The fintech industry requires young, what are called digital entrepreneurs, and a very skilled workforce. We are all aware of the Great Resignation. People are leaving the country for the UK, for Canada, and many other places. Okay, this trend is going to continue. But that again, is a problem. And that problem has to be fixed. So I see this year some more Andelas coming up to tap into that opportunity that this Great Resignation is creating, so that the talents that we need to grow the space continues to be available. And finally, I would say that real and sustainable growth will come from deepening financial inclusion. It is estimated that by 2050, there could be about 400 million Nigerians. We cannot afford to have even half of that population not to be financially included. So I suspect and I believe that real development will come if we are able to actually go after those that are still financially excluded, bring them into the financial system, and help to deepen that particular area. In a nutshell, I would say for 2022, we will see some more foreign direct investment coming to the country. This foreign direct investment will go not only into the traditional fintech space, but into areas like health tech, agri-tech, and a few other areas, again, because there are challenges in those areas that need to be dealt with. The challenge of talent is global. It will not go away. So I also expect to see some innovation in that space to fill the gap that this Great Resignation that we are seeing can create, so that the growth we are seeing in the fintech space is something we can sustain. Thank you.
All right, thank you very much, Michelle. Thank you for those thoughts. So the 80% that is still not reached can be reached. And your point is this can be done through acceleration and further innovation. Also, we need to look at the other verticals with respect to mass transit, for instance, as well as agriculture, healthcare, and so on. You also believe that talent migration is a critical, issue that needs to be addressed for us to scale with respect to fintech in 2022. But one point that you made that really, catches my attention is your thoughts around the lack of right infrastructure with respect to the difficulty we've had so far, onboarding this 80%. You believe that if we have the right infrastructure, it will be easier to bring these people on board. Thank you very much. Those are very, thought-provoking statements that you have made, and I believe the industry is listening to you as usual. Thank you very much, Michelle Legbe, for those thoughts. At this point, we need to go on to the next speaker. But before we do that, I'd like to just announce that this segment, the Outlook 1 segment, is supposed to go on for 40 minutes. And therefore, every speaker is supposed to speak for 5 minutes, okay? It's come to my notice that we're not going to be having Premier Oiwo, who has earlier been announced as speaking on the infrastructural outlook. Rather, he's been represented by Olufemi Sojinrin. Am I correct?
Very correct.
All right, so Olufemi Sojinrin is the Chief Information Officer for the Nigerian Interbank Settlement Systems, and is going to be looking at the infrastructural outlook. Infrastructure is critical. I mean, going back to what the Group Managing Director of InterSwitch just alluded to, we need to fix the fintech infrastructure for us to scale. And this is one of the things Mitchell believes should be the focus for 2022. What are your thoughts, Femi?
Thank you, Yinka, and thanks Ade and everybody for creating this opportunity. As usual, we're thankful for giving NIBS the opportunity to speak here. I would like to apologize firstly on behalf of Premier, who was really looking forward to being here, but unfortunately he had to be somewhere else. Infrastructure, which is what I'm going to focus on today. So let me start with my slide. So I'm sure we all agree that when we start to talk about fintechs and that wonderful environment, we can be here for days. Unfortunately, I have just 5 to 7 minutes to cover all the things we have to say. So I'll try as much as possible to be as brief. The speakers before me had mentioned the funding or the wave in global funding in fintechs. I think it's clear to say that this is a market that will continue to grow. In Q4 to 2021 alone, there were over 9,000 global deals with value of 176 billion in Q4 alone. In 2021, there was an all-time high in global funding for fintechs at 620 billion. And we will continue to see this trend in 2022, sorry. In 2021, there was a minimum of about 118 unicorns, which are companies that are currently valued over $1 billion, which continues to show the trend and the interest in fintechs. Some of note would be N26, which is relatively a new bank, German bank, but it's a mobile bank. But now is number 2 mobile bank in Germany. They raised about $9 billion over the past 2 years in funding. We also have companies like Mint. I believe Michelle did mention that the Philippines is a major market for investments and funding and growth in fintech. Mint is a Filipino fintech in the lending space, and they raised last year about $2 billion. And then, of course, we have Klarna, which is a Swedish company. So it's an European company recently that provides a very unique value proposition around buy now, pay later payments. And they are valued at about $47 billion. And of course, in the Nigerian or the African space, we have the likes of Flutterwave, OPay, Yellow Card, and Yoko, which is South African. What is influencing the growth of funding and interest in fintechs? I can say 2 of the major reasons why fintechs are growing astronomically is the use of the institutional, or what I would call legacy big techs, as well as legacy banks, using fintechs as an opportunity to grow inorganically. So the likes of Goldman Sachs, Citigroup, JP Morgan, as well as Meta, Apple, Google, and Amazon have invested largely in smaller companies, in smaller fintechs, and have used that opportunity to grow their business. A perfect example is Meta and WhatsApp, who have recently launched their WhatsApp Pay in Brazil and as well as India. And that's a lot of success in those countries. So infrastructure, let's quickly talk about some of the major trends or infrastructure that have been affecting the growth of fintechs and why it drives so much funding. Of course, blockchain is a major impact, has had a major impact on fintech and the growth of financial payments. The underlying infrastructure for Bitcoin and other digital currencies. We've also seen stable coins released by a couple of countries. Of course, e-Naira being the most recent within the African space, and we've seen that is already growing with a lot of interest. We also have API, open APIs, as well as the Sandbox experience, which is a platform that has allowed the legacy institutions extend their growth or their products to fintechs. Fintechs have leveraged on this infrastructure to innovate and provide an improved customer experience for customers. And this, of course, has created the wow effect for legacy systems as well as fintechs. We also have AI, robotics, as well as intelligent sensors. We've seen how organizations like Amazon Go have used this to create a very unique experience in the retail space with attendant-less retail shopping. This is going to continue to grow within the African as well as the European market, which should create a lot of opportunities for funding as well as fintech growth. We have the payment rails. So there's going to be what I would refer to as the battle of the payment rails. We have the legacy remittance companies like money transfer companies like MoneyGram, Ria, TransferWise, being challenged by new entries like Tunes. And what has happened is these organizations would extend their rails using open APIs and the Sandbox experience as well, which means if I start a payment company today, I have the possibility of extending payments over 250 countries. Imagine that before, when we used to deal with brick and mortar banking, you would have to open branches in all these countries. But today, if I launch a bank or a digital bank, riding on these rails, I have already channels of which I can extend payments to over 200 countries riding on these rails. The telcos will continue to play a key role in driving payments. And of course, the penetration of internet access is also going to be valued a good rail for ensuring that there's growth in payments. We still have reduced internet or low quality internet access in some areas, even if you take Nigeria into consideration. And as this grows, it will also grow the payment industry. We also have standards like ISO 20022, which is going to be a key enabler, providing a standard for payments, which will enrich the data in payments and, of course, improve business intelligence and analytics, which would drive fintech growth as well. In a nutshell, those are some of the key infrastructure that would affect fintechs. And in closing, I would just like to touch on some of the services that NIBSS is providing to also enable the Nigerian banking space across 5 segments. We have instant payment services, which is not new, an NIP service that helps drive payments across the banking industry. And we're also introducing dispute resolution services that allow centralized customer service with respect to disputes. We have our identity services, which is going to be a major driver as well, with centralized validation and verification. I believe Michelle also mentioned digitization of the government as well as centralized validation services, which will be a major impact on how fintechs grow in 2021. We also have services around payments. We released our NQR service last year, which is growing and has been a major enabler for payments. We also have NXPay, which allows customers pay without putting their account numbers. You can use your email as the payment ID. And we also have services around our industry services, like I mentioned, driving the POS infrastructure, centralizing FX requests, as well as the PTSA platform. So in a nutshell, I would say these are the things that will be influencing fintech growth in 2022. I hope I've managed to touch on most of the points. Thank you.
Thank you very much, Olufemi. You indeed have touched on so many, areas that impact the sector. I mean, and we'll continue to do so going forward. You've talked about some of the infrastructure around blockchain and digital currencies, Bitcoins as well, which have become very popular in Nigeria and across the world. Open APIs as well. You've also talked about ISO 20022 that will, allow or improve the growth in the area of analytics and business intelligence and so on. You also then, touched on some of the things that NIBS is doing with respect to your 5 verticals. I'm sure, some of these points that you have shared are in line with what Michelle, did talk about in the opening around the payment verticals. So thank you very much, Femi. Olufemi Sojourner is standing in or sitting in, as it were, for Premier Oyiwo, the Managing Director of Nigerian Interbank Settlement Systems. Thank you very much. Please, gentlemen, stay around. Both Michelle Elegbe and Olufemi Sojourner, please stay around. For the audience, I can see a couple of hundreds of people already on the program. We will be taking questions at the end of this segment. This is Outlook 1, right? So we'll just take the remaining speakers, just 2 of them, and then we will take questions at the end. Please feel free to share your questions on the chat, and then we will go to them once we finish with the lending outlook. Okay, keep the questions coming, please. So at this point, we would like to just go straight away to talk about, to look at projections and trends to expect in the WealthTech Outlook for 2022. And to do that, we have Odun Eweniyi. Odun is the CEO of PiggyVest. Odun has been on standby from the beginning of the program. Odun, you're welcome. Odun Ayo Eweniyi.
Hi.
Share your thoughts and projections on WealthTech Outlook for 2022. Thank you.
Thank you. Hi, everyone. Good morning. My name is Odun Ayo Eweniyi, co-founder of PiggyVest, and I did have a short deck to share as well. So here. I've worked in PiggyVest, which is retail fintech, for about 6 years now. And every year we're asked to share an outlook. And this time I decided to kind of go outside of PiggyVest, but also stay like within Nigeria and Africa for what these projections are going to look like, because I wanted them to be as locally relevant as possible. So what we've seen in 2021 was, despite the pandemic and everything else that the world had going around, fintech experienced record funding in 2021. But more closely, fintech in Africa and then fintech in Nigeria experienced more record funding in Africa in 2021. And one interesting thing that's a byproduct of record funding is that there's far more competition. So as we announced Cheaper Cash's round and Florida Wage round and Paystack's exit and every other, and Kuda's raise, what you see is more people are coming into the retail fintech space, the retail wealth tech space, and there's far more competition. So companies now need to do a bit more to stand out. So if you're a fintech company in Nigeria and Africa, this is what 2022 is likely going to be focused on for you, because there's just like, there's a finite number of people, but there is an increasing number of companies trying to serve those people. So the first thing is user experience. Wealth tech is all about people, right? It's whether it's enterprise wealth tech or retail fintech, it's still the same thing. It's all about people. And if you need to stand out, the one thing that like we've seen improve businesses over the past like 5 years since this phase of fintech is clearer communication, simpler online account navigation, and great customer support. People think user experience is cliche, but a lot that differentiates a fintech from the other fintech is how people feel about it, is how people relate to the product, is how people feel when they have challenges, when they contact them on social media, when they call them, when they email them. A lot of user decision on what fintech or what wealth tech to use or to continue to use is based on user experience. Second thing is workplace savings. Workplace savings is going to play a major role this year because now we have the Great Resignation. We have more people than ever coming to work in tech. We have all of this training, schools training people to work in tech. Like I said at the beginning, there is an inordinate focus on fintech and wealth tech and everyone coming into it. And then as a whole, there's been everybody pushing the benefits of working in STEM, working in tech. What that means is that it's slightly shifted from being an employer's market to being an employee's market, right? Where employees now have their peak. So workplace savings, the benefits that the company offers is going to have to step up. So growing companies need to offer better benefits, and no one makes it better to connect with the next generation of employees than wealth tech companies. Pensions and retirement savings are all well and good, but younger people want to hear more, I suppose, cool ways to save for the future other than warehousing their money with pension funds. So companies around wealth tech and companies around workplace savings specifically are going to just kind of like emerge, right? We need savings products and processes for workplace will start to get digitized, and new forms of savings and pensions and all of those end of work plans are going to get digitized and are going to take center stage this year. We've already seen it happening with AnyPay and PayFlexi and all of these other companies emerging, doing focused on how do you make the best of your workplace compensation, right? And we even had Cassava just like last week raise, and Cassava is focused on what? Earnings insurance. So workplace savings are going to just kind of like explode because companies need to offer better benefits, and you're going to need to edge other companies out in the fight for talent. Now, data. Successful wealth techs will use data aggregation to put their clients first. We've always been very insistent on the role of data in how we make decisions. But in 2022, there will be more data aggregation, right? From the infrastructure conversation that we've just heard, more than ever, data points about each individual exist on the internet, right? There's more of you is going on the internet every day. Your habits, what you like, how you behave, what you spend on, what you earn, what you want to earn, all of those things, your financial data more than anything is being revealed on the internet. And wealth tech companies are going to need accurate, up-to-date, and complete information to be able to serve customers better. So I think that companies who are prioritizing data science, data aggregation, data mining are going to also kind of have the edge this year because you're going to, a lot of the times what your users say they need is not what the data says they need. We've experienced it even before data science became a thing, where people say this is what we want, but their habits on your platform, their behavior on the platform doesn't agree. So companies that will be able to use data aggregation to put their clients first are going to actually come first this year. Retail investment platforms will drive wealth tech. This is my favorite. Last year, Robinhood raised a $2.4 billion round. And that was the largest fintech round in 2021. And so Robinhood is a retail fintech company, right? And at the beginning, I told you that wealth tech is about people. The companies that are focused on the benefits for individual B2C retail investment platforms will drive wealth tech this year, from workplace savings to investments to alternative investments. B2C companies, based on the entire movement of the fintech like ecosystem, are going to take center stage this year. And it's not going to be just our platform, even though I'm happy that we're playing here. It's going to be platforms like RiseVest, like Cowrywise. All platforms that are aggregating the best amount of individual people are going to see their like services kind of just blow up this year, because while general fintech has received attention in 2021, I think that B2C companies that are focused on aggregating users and amassing large number of users will finally see their day in 2022. Non-traditional asset classes. So I saw a question in the chat around, will Nigeria ever go back to cryptocurrencies? We're keeping our fingers crossed for that, because it's actually really important that we are participating in like the cryptocurrency ecosystem. That being said, in 2022, users will look to non-traditional asset classes, cryptocurrencies, NFTs, and just generally decentralized finance will see increased adoption. And there will be a rise in the number of companies that enable users to buy, hold, and sell these assets. 2 years ago, it was just Helicarrier. Today, there is at least 25 companies in Nigeria helping people buy digital assets. That will increase because they're gaining momentum, and Nigeria and Africa will not be left behind. Further consolidation. This is really just an observation that I made since like the last half of last year around traditional companies realizing that they need to kind of play in fintech, right? So what I've seen is that traditional players will realize the opportunity in fintech, and they've already started to. But the result of that realization is that a number of them are going to build these fintechs in-house. Like we've seen GT Bank move from GT Bank to GT Co. in order to help them play in the payments and retail fintech and all of those spaces. And we're going to see more of that. But I also think that an exciting number of traditional companies will focus on partnerships and acquisitions as a way to further grow the ecosystem and to also like increase their own reach in the like digital space. What I think is that our ecosystem is so young that we're all going to eventually realize that M&As are the only ways for us to grow. There can be several small fintech companies, or there can be few large successful ones. I think we all know which one's better. Personalization. This is if you're operating or hoping to operate a retail fintech company, I think that this is one of the most interesting like trends for this year. Millennials and younger generations represent a growing share of clients in wealth tech, but they're also the generation that's used to Amazon suggesting what to buy. If you open Amazon today, well, if I open my Amazon today, Amazon will tell me your suggested size is X, or people like you bought this one, would you like to buy it? People are not going to stop wanting to see that across platforms, including in their wealth tech platforms. We've already gotten a ton of requests in PiggyVest. Why don't you tell me to do this? Why don't you tell me to save for this? How do I save for my house? People have these needs, but they also demand the same level of personalization and service that they get from e-commerce platforms and like personal shopping platforms from their fintech platforms when it comes to managing their financial assets. And this directly links back to data aggregation in being able to provide that personalized service. Right. So I think that generally those are some of the high level trends that I see retail like wealth tech just kind of focusing on this year. The most exciting developments are obviously still ahead, because while we think that like we're in the throes of like, oh, the great fintech in the center stage, I think that there is still so much more to be done. I think that there is a lot of progress that's still yet to be made, and there's still a lot of ground that's still yet to be covered. So wealth tech will continue to be a hot topic this year. There's a new generation of investors. I know that like younger like founders like myself are beginning to fund companies coming after us. So the trend of founders funding founders is not going to stop, it's going to continue. The new generation of investors are here. They're starting as angels, but we will eventually move into venture capital and private equity. In the same vein, a new generation of founders are here. They are much younger, much more in tune with the latest technology. And in that same vein, the newest technologies are also still ahead. And there are startups who are still coming who take advantage of that, like, and build innovative solutions, particularly in the fintech and wealth tech space. So yeah, here's hoping that we're all able to take advantage of it. And here's a good 2022. Thank you.
Right. Thank you very much, Odunwayo, for that brilliant presentation. I'm seeing comments already on the chat, just, commending your presentation and how people agree with what you're saying, generally. I'm very enthused about, the fact that the younger generation, the millennials, are the core of wealth tech. Obviously, I mean, the new generation also are taking over in terms of fintech founders. I mean, they're just everywhere. So it's not a surprise to then see new product services coming up in terms of wealth tech. It's not also a surprise to see that the user experience, for some of these platforms are changing. I'm sure we will come to that during the Q&A session. We're running out of time at this moment. So we'll say very much, Odunwayo, for that presentation. So at this point, we'd like to just take the last presentation under this segment, Outlook 1, and that will be by Lauren Haney. Lauren is the CEO of Fair Money, and Lauren is going to be talking about the lending outlook for 2022. Lauren, I can see you already.
Yes, thank you very much. Can you confirm that you can hear me well? Perfect. All right. Well, thank you, first of all, to the Fintech Association for organizing this event. Thank you, everyone that has spoken here, and thank you for all of the people that are participating today. I think the Fintech Association has played a great role in building the ecosystem, and we at Family are also looking forward to work together with you as a partner in the next years to come to build this ecosystem going forward. So first of all, a quick introduction to what Fair Money is to those that may not know us today. So Fair Money, what we're trying to build is a new mobile bank in Nigeria, offering a variety of financial services. Some of you might have heard us already, that the name Fair Money, mainly in relation to our lending product. In reality, we're actually offering today a large variety of services licensed by the central bank and focused mainly on providing many financial services such as lending, payments, debit cards to our users, and striving to be the first branchless mobile bank in the country. Now that being said, our main expertise today still lies in the lending sector, and I was asked to share some of my thoughts on how we're seeing the lending space playing out in Nigeria over the next couple of years, and really what is the outlook for this industry in the next 5-10 years to come. First of all, I'd like to provide a bit of background of why we are so excited about this opportunity in Nigeria. And I think the first trend that I would like to highlight here is this trend that has enabled us really to build this company so far, which is really that the Nigerian consumer and generally the African consumer has shifted towards a significant use of mobile devices. We are seeing mobile devices similar to what you would look at as a train rail, right? So as rails that enable us to provide our solution. And let's think a bit about what these rails do for us, right? If we take a step back, we see that in Africa, sub-Saharan Africa, there's only around 4.5 branches, bank branches, for around 100,000 consumers, right? If you look and compare that to the US, where you have roughly 32 branches on 100,000 consumers, you would already understand where part of the financial inclusion challenge in Nigeria comes from, really. Banks are far from their customers. And looking at that, however, I think there's one trend that we see and that we've seen over the last couple of years accelerate very quickly is that while the bank might not be next to your house, everyone has a smartphone. Right? 80% of the African consumers have a smartphone or access to a smartphone, and also internet penetration is increasing. And so what we are thinking, particularly looking at the lending space and especially at the alternative lending space, where you leverage mobile data as underwriting tools, you can say that especially this trend, especially the fact that almost every African today has some level of smartphone device, is one of the biggest trends that enabled us to build this company and to drive alternative underwriting strategies. If you look at Nigeria in a broader sense, however, you would also notice that, given African peers, first looking at the internet users in general, Nigeria is still lacking behind its peers like Kenya, South Africa. Fewer people have access to bank accounts, fewer people use cards, and fewer people use digital means of payments to bank every day. Very important to understand that. Looking at the next slide, where you would see then specifically looking at the lending sector, you see that if you look at just the credit to private sector, that the credit that was extended or is extended to the private sector, to the retail market, in Nigeria is significantly behind its peers, especially in Africa. So if you compare, for example, Nigeria with Egypt, you'd see if you compare domestic credit to private sector in percentage of GDP, you see that Nigeria is lagging behind significantly, behind its neighbors and behind the other African countries that we're looking at, like, for example, South Africa. But you'd also notice that the entire African continent is lacking behind significantly what you would consider maybe as more emerged economies such as France or even the United States, where you see that 217% of GDP is actually extended into credit into the private sector. So, and also other emerging markets, if we are zooming out a bit and we are comparing Africa or specifically Nigeria to countries like Indonesia, Russia, Brazil, or even China, you'd see that the domestic credit to the private sector in 2020 and also still in 2021 is lacking significantly behind neighbors, more emerging markets, and all the other emerging markets, right? So you would understand why our bullishness and our optimism in the alternative lending space, or generally in lending as an activity in Nigeria, is so positive, because compared to basically any other market in the world, you can see that the average Nigerian consumer, the average Nigerian retail customers, in any number that you look at, really is completely underrepresented, right? And so our goal at Fairmoney, and I think the wider goal of the alternative lending industry in Nigeria and in Africa, is to move up the credit that is provided to the private sector and also to the MSME sector in the next couple of years. And I think our goal here really overlies also with the goals of the regulators and other stakeholders such as the Fintech Association in closing that gap and providing access to liquidity, to lending products to the average Nigerian consumer, the retail sector, and then of course also the MSME sector, which is really the backbone of any economy, and especially the Nigerian economy. Looking a bit more macro level, so to speak, you can however see that there's already a very encouraging trend. If you look at sort of the net domestic credit in trillion of naira, you can see that even in Nigeria, even within Nigeria, we have seen a very significant growth of credit extended to the private sector, moving up from only 8.5 trillion in 2010 to almost 50 trillion in 2021. So while you could say that we'll still lag behind our neighbors, you can also say that there's already significant improvement over the last especially over the last 3 to 4 years in that space. We attribute that on the one hand to very well thought out regulation that has incentivized banks to lend to the retail customers and also to the MSME customers, but also, and I think that brings me to my second point, you also see that today other financial institutions, including the microfinance banking sector, are really playing a very strong role in driving this consumer credit in the country. And I would say specifically fintechs have been playing a huge role. Fintechs such as Family have been playing a huge role in bridging that gap and including more and more customers in the lending space. You can see that from what CBN is quoting, OFIs, so other financial institutions, have granted over 23 million facilities to around 9.3 million loan beneficiaries in Nigeria as of November 2021, and that is an encouraging number. And I think we as a fintech sector can sort of proudly say that part of this uplift has been driven by digital means, has been driven by companies like us that are using more alternative data points to underwrite consumer and MSME credit. And of course, we all work very hard and are very optimistic that this curve is further increasing, and that in the end, the average Nigerian consumer will have access to more and more credit facilities over time, which then helps to sort of increase economic output and help us as a country move forward. Yeah. Now, there's a few other things that I want to also highlight on a macro level. Really, if you look at these numbers as to what is possible, we are still really small. Like in the next 4 years, we actually think that the addressable market for consumer and MSME lending in Nigeria is almost tripling. That is driven by multiple factors. Of course, some of my colleagues here have already highlighted population growth, but also we do notice that the Nigerian consumer is getting more and more accustomed to using digital means to borrow, and gets more and more comfortable with that idea. And so we are actually thinking that by 2025, we'll be looking at a roughly 40 billion market as compared to today, where we are thinking that the sort of the AUM is achievable by sort of digital lending and fintech players is around $70 billion. So very, very exciting news for us and generally the ecosystem. The market is not only big, it's also growing very quickly. And we are seeing that in the stats that many of my colleagues here have already highlighted. More and more venture capital is flowing into the system, which then leads to better and more sustainable solutions for the end customer in Nigeria. And I think that is what we at Fairmoney are very excited about, and what we at Fairmoney are also trying to contribute to. Now, what's next? What we see is that, as any market in the lending space is maturing, we are seeing that also the regulator is playing a closer look, and we really appreciate that, tackling unethical lending practices, and also helping to develop guidelines and frameworks for lenders, for alternative lenders. And that is a development that we are also contributing towards, helping through organizations such as the Fintech Association to frame and build this regulatory framework that then enables all of us to thrive and build this sector out. At the same time, already saying we see more innovation in the lending space, which means there is more choice for the consumer, which is great, and also more innovation in not as to just access to credit, but also what kind of credit. We see huge opportunities in actually providing longer tenors, move into the some of the underwriting methodology that we've developed into the SME space, and then also work more and more on new technologies such as buy now pay later, which is something that is not very common yet in the Nigerian market, but where we also see a lot of movement at the moment. And of course, in next year we are going to have an election. We are looking forward to how that is going to impact sort of the overall ecosystem development. We think there's going to be a lot of economic activities, and then also, of course, some campaign activities might also be indirectly funded by credit, not necessarily by alternative lenders, but we are looking forward to see how that is going to impact NPLs in the long run. All that to say that I think on the alternative lending space, we're very excited. We're building bigger things for the consumer, better things for the consumer, and as Fairmoney, we are very, very much looking forward to play a significant part in the ecosystem. Thank you.
Right, thank you very much. Thank you for those projections and thoughts in terms of the trends that you see around lending going forward. Some of the things that I'm taking away is what your allusion to the fact that the market is big and is growing, still growing, and those are some of the things to look out for in 2022. You also talked about increased regulation because of some, unethical practices that are beginning to show up in that space. So thank you very much for those thoughts. I think at this point, we should just take some questions that we have. And ladies and gentlemen, that actually is the end of the Outlook 1 session. I think at this point, we should just go straight ahead to take, questions. And I'm going to start, with Michelle Elegbe, the Group Managing Director of InterSwitch Group. There's a question from Damilola Adeyi. Damilola asks, what about transport sector? There is more to capture around transport. I think you talked about the transport sector. Maybe you just want to expatiate a bit more.
Thank you, Inka. Now, if I was to make a bet on a sector that could really transform and drive growth into that 80%, it should be transportation, to be honest. Why? If you're elderly or young, you will move. If you are male or female, you will move. If you have a job or you don't have a job, you will move. If you're not feeling too well or you're feeling very well, you will move. So transportation is one area that if we get right, mass transportation, if we can digitize that area, the impacts will be huge. Digitize it and embed payments in there, it will be a very huge impact. Okay, so yes, transportation is an area that must be looked at. It's challenging because to a large extent, mass transportation is still largely controlled by governments. So it is not the way you go into a private sector organization and you sell value and they see value immediately. It takes a bit of time and effort to convince government about digitization in the area of transportation. But if it can be done, it is one area that can really unlock a lot of transactions.
All right, thank you very much, Michelle. Go straight to the next question from Oluwaseun Adesonya. Oluwaseun asks, how are the likes of NIBS keeping into PAP's initiative by Afrexim? And this should actually go to Olufemi of NIBS. How are the likes of NIBS keeping to the PAP's initiative by Afrexim? Go ahead, Femi.
Thanks, Yinka, and thank you for that question. So, yes, in my presentation, I did mention that one of the key drivers for fintech growth and payment growth would be the battle of the rails. PAPS is the Pan-African Payment Settlement System, which I would say is a very similar institution to NIBS, but providing the service across various African countries. We are presently in talks with PAPS. We have initiated that project for integration, which we believe we should complete by middle of March. So by middle of March, NIBS should be able to provide not only services to provide a platform to all the banks within Nigeria to take advantage of inter-Africa payments, but also to fintechs to layer their own payment products on top of this service and provide payments across Africa. So it's an initiative that we're really interested in. We're working really closely with PAPS to make sure that this is completed by the middle of March. Thank you.
All right, thank you very much for that feedback. I'd like to direct the next question actually to Odunayo. I believe Odunayo is still here. Right, thank you very much. The question from Timi Balogun, is Nigeria ever going to join in cryptocurrency?
I don't think that question is really like something I can answer. I think that Nigeria is participating in cryptocurrency. It's just that it's unfortunately not formalized. And the formalization of it is something that only the central bank can actually speak to. But as a fintech player who's very aware of the advantages that cryptocurrency and decentralized finance holds, I certainly hope that we can make more progress in figuring out a way that works for both sides so that we can participate fully and legally.
All right, thank you. They don't go away yet, just yet. The next question is also for you. Same question, the same person asked, that's Timi Balogun. Can we use the concept of decentralized finance for sharing information on our people so we can better understand them and then advance from there? Can we use decentralized finance to share information?
I think I think that's definitely one of the applications of the blockchain, as it were. So there is a lot of things that it can be used for. ID verification is one of them. Credit scoring is another one of them. I'm not sure about health tech, but I think that a lot of things around identity verification and just like record keeping, the blockchain is pretty optimized for. So I think, but baby steps, right? Participate in cryptocurrency and retail cryptocurrency first, and then figure out how blockchain comes to play, like in terms of policy and identity.
Thank you very much for the feedback. Thank you. The last question here for this segment is from David Adeleke, and it's going to Lauren. Lauren, is there any scope of regulation that addresses interest rates in lending? I'm sure that refers to lending. Is there any scope of regulation that addresses interest rates?
Yes, thank you very much for the question. Very relevant. First of all, I have to say the same as Udin just said. We're not. I'm not the regulator. I'm not in the regulator's shoes, so I can only give sort of the perspective of what we see as a corporate, and what is our view on how we think regulation should address the overall ecosystem of lending. Generally, what we think is that. How we're thinking about interest rate is the interest rate is a question is comprised of multiple factors that is then resulting in the last the final outcome for the customers, which is the interest rate. So if we think about it a bit more granular, you'd see that interest rate is directly related to so the pricing of a loan is directly related to the risk that a company takes, and in our view actually we want to encourage new players to come into that space and encourage new industry entrants in order to lend and do that profitably. And so our view is that regulating the interest rate per se is not the right move. However, we do see a lot of need in regulation in the Nigerian ecosystem, particularly towards unethical practices that we have seen being played out over time in the ecosystem, and these are more, I would say, regarding the way how loans are actually recollected. So we see, or we have seen in the last couple of years, a development where you see lenders that are not licensed actually that are operating in Nigeria as a market, and that would then, for example, result in recollecting loans unethically, doing things like loan shaming and all of those things. So I think here we are sort of waiting and looking for a very strong response from the regulator in the next. Well, we already know that there's different frameworks in place, and we as a company are actually contributing to these frameworks to help the regulator understand, how to address this issue. So I think regulation in the lending space overall is a good thing, right? As a company, we are seeing positive regulation movements in Nigeria and also in other markets. And so in our view, the part that should be specifically regulated and even self-regulated should be the way how loans are recollected. Yeah.
All right. Thank you very much, Lauren. Thank you for that. All right. So at this point, we come to the end of this segment on the Outlook 1. Just to say a big thank you to Michelle Elegbe, Group Managing Director into Switch, Olufemi Sojourner is sitting in for Premier Oiwo of NIBS, Odunayo Ewini, CEO Piggyvest, thank you very much. Lauren Haney, thank you very much, CEO of Fairmoney, for sharing your thoughts and your knowledge with respect to the different fintech verticals that we've taken on so far. I'm sure this has been very useful to our viewers. Like, you know, we have hundreds of people already watching this program, and there's a lot of knowledge already to take away from this. Thank you very much, gentlemen and ladies. Thank you. We'll go straight away to the next segment, Outlook 2. And I can see Tosin already on standby. Tosin Enyolorunda is the CEO of TeamApt. Tosin will be sharing his thoughts and projections, trends, and all of that with respect to digital banking. So if Tosin is ready, please go ahead and shoot. Thank you.
Thanks, Adeyinka. Thank you very much. I'm excited to be here, and hello, everybody. I think in the last couple of years, we have all been having some major runs with respect to developments, progress, a lot of energy in the industry, around the financial technology industry, banking and financial technology industry. And we see that these trends are, things that are to continue. I'm going to share my thoughts around how the industry will actually begin to, evolve, and the trends we should all be expecting. Generally, when you want to look at what the future will look like, a framework for examining it is to look at what kind of determines the way all the forces play out. And that's what basically begins to shape what the future looks like. And what are the different forces that are in this industry? The number one force are the customers. Basically, what are the kind of customers' expectations? What's the expectation looking like? And, customers are almost generally easy to always understand because they almost always want the same set of things. Customers always want it easier. They always want it faster. They always want it cheaper. Your customers will generally always migrate to any service or any product that gives them easier, faster, cheaper. So almost every evolution that we're going to see in all industries. Why is Apple dominating? Apple created something that was easier, faster, but not cheaper, of course, but also gave them value that is eventually cheaper. Because Apple's value, for example, is the fact that it is an article of ostentation. So people add the value of the product together to do the value of the brand. So, but almost ultimately, customers will always want value to be the best. So we should look at that force coming from the customer's angle. Next is we should look at the regulation. What's regulation going to be saying? Because we're in a very regulated industry, basically, and regulation has the fundamental responsibility of ensuring that there's stability in the industry. Then we should now look at the other players, essentially, which is essentially competition. Now, so all the things that we should be looking at is basically how all these forces will play out: first, customer forces, regulatory forces, as well as the competitive forces will play out. And the industry generally is themed into three different segments overall. There's payments. Payments is transaction processing, it's web payment gateways, is ATMs, is POS, is mobile SDKs, essentially allowing people to move money from one form or the other. Remittances. There's credit, which is giving people leverage, credits. And there's also general money management, things like savings, things like investments and all. Those are the three industries. So let us look at the three people, the three forces: customers, regulation, and competition in three themes: payments, credit, and money management. And the objective here, And the future is going to look like that. The objective here is how will customers get easier, faster, cheaper in payments, credit, and money management. And the way these forces will pull out is competition. Everybody will try to do different things. And this is where innovation will now start coming out. So the trend we should imagine in the future is, what are these tools that people, all the different players will need to bring out to be able to ensure that the customers get their objective. And the first thing we'll imagine will come out is going to be data science. Data science is beginning to play a major role in all the different kind of themes. Credit, for example, I think most credit players are heavy on data science now. We found, for example, internally data models that are predicting and doing better than human risk appraisals. And data science does not even just stop on credit. For example, anomaly detection and fraud protection has data science needs, for example. So data science is a trend that you should expect to be deployed more often as a trend in the future. And we're going to see startups start coming out doing data science. There are startups that you'll be able to see that are simply going to help you with credit decision process, fault detection processes, fraud detection processes. So that's going to come out very, very soon. That's a trend we should expect, all in making it easier, faster, and cheaper for customers. Number two is we should expect embedded finance and APIs. Almost everybody is going to become a fintech, even if you're a grocery shop, even if you're an online marketplace, everybody wants to become a fintech. And this, for example, has seen the explosion of one of the products that we pioneer, which is virtual accounts, which is a payments product that allows people to collect money through transfers. But this is going to go one more step further, because people will now begin to want to embed complete banking services in their applications. So we're going to begin to also see products, more players coming into the industry who are simply focused on embedded banking. Next is going to be, we should expect, remittance is still broken in the country. There's a dynamics right now, of course, with respect to the Naira exchange rates. And this is a big opportunity, for example, for whoever can crack it in a way that all the forces are happy, regulation is happy, customers are happy. So I believe that a product that will allow money to be moved freely while fitting the regulatory objectives in the industry is what we should expect to also going forward. Big tech is another trend we should expect. Big tech is coming soon, bigger into this payment space. Apple, for example, is releasing payment acceptance on their iPhones. And this suddenly means now literally all iPhones can become point of sales. And that is major. The same thing is happening to Android phones. Apple is pressuring a lot more now into payments. So is Google. So is Facebook. So big tech is another trend we should expect to also come in also. We should also expect there to be, today, a lot of innovation is happening in retail banking generally. And business banking is not getting the attention it needs. But the truth is, if you look at the industry and look at the numbers, the middle market, the meat market, is actually the meatier market, are actually the business guys, self-employed or employing 1, 2, 3 people who actually carry the bulk of the economy. We should see trends in the future where there are going to be rise of platforms who are focused a lot more, especially in Nigeria, in providing business banking solutions in the future. And for example, we are proud to say this is something that we're currently also working on and should announce literally very, very soon. All right, so if I put all those my points together, data science, embedded finance, big tech, remittances, and focus into digital banking services are trends we should expect in the future. And these trends are simply determined by the fact that customers will always choose solutions and services that are easier, faster, and cheaper. And when we combine the forces of customers, players, and competition together with regulation together, the kind of trends that we can imagine in the future are some of the points I've earlier said. I'll be happy to take questions. Thank you very much.
All right, Tosin, thank you very much for your perspectives going into 2022. Couple of points. Customer is king with respect to, the sort of products and solutions that you roll out. There must be your first, consideration. Cheaper, easier, faster. Of course, you alluded to data science. We begin to see a lot more use of data science in terms of analytics and all of that. Competition is also, getting bigger and stronger. I think it was Odunayo that spoke briefly about that, and then also embedded finance and big tech are things to look out for as we proceed in 2022. Thank you very much for those thoughts.
Thank you.
Please stand by. We will be coming, back to you with questions. We already have some of those questions coming on stream. And for our participants, I'd like to just take the opportunity to again announce that you can go to the Q&A or to the chat to post your questions. We will take those questions immediately after this segment is over. And having said that, again, thank you very much, Tosin. We'll go straight up to Daniel Awe, who is the head Africa Fintech Foundry. Daniel is going to be talking about startup scale. I believe that's also very relevant for us to understand how, we saw what happened in 2021 and before, how things panned out in the industry in terms of scale. What do we expect in 2022? Daniel is here to brief us. Daniel, over to you. Daniel, you're muted. Please unmute.
Hi, good morning. I'm actually trying to unmute my. Hello, can you hear me?
Yes, we can hear you. Go ahead, please.
Good morning. Can I just share my presentation?
Yes, please go ahead.
Thank you.
So while Daniel is doing that, please note that we have 5 minutes for every speaker in this segment. We still have 4, slots to go. Each speaker, please note 5 minutes. Thank you.
I don't know if you can see my presentation.
We can. Yes, we can. Yes, we can.
Okay.
The floor is yours. Please go ahead.
Excellent. All right. Good morning, and thank you, Yinka, and sincere appreciation to Fintech NGR for this opportunity and for putting this program together. My name is Daniel Awe. I head the Africa Fintech Foundry. It's an arm of Access Bank. And I'm actually excited to share my perspective of Fintech Outlook and how we expect Fintech to scale in 2022. My presentation, before I delve into the presentation, very, very short, I'm just going to share how I dimension my thoughts. So we'll look at the period. I'm going to look at the period of fintech ecosystem in 2 different categories. I will start with the pre-COVID, the post-COVID. I know we're still in COVID, but I think the world has found a way to live with COVID now. So we look at pre-COVID, we look at post-COVID. That's my first dimension. And secondly, when you look at the key pillars for fintech success story, I'm also going to break that down into three. I will look at them from funding perspective. I will look at them from solutioning perspective, and I will look at them from sustainability and perception perspective. Then my last dimension is going to be from geographical view. I'm going to look at them also from a global perspective, from Africa perspective, and they will come back to our great home, Nigeria. So that's just the dimension of my conversation this morning. So I will first start with the global and the local, the global and the local landscape. So let's look at fintech in 2020 and in 2021. We saw a huge investment from funding perspective in fintech businesses in 2021 with a whopping $131 billion, which was probably almost about over 200% investment from what we had in 2020. Of course, we know 2020 was basically because of pandemic, but that shows how resilient this market is. That shows the perception, that shows the opportunity this market stands to gain. This is the next phase of emerging economy, because that's the only place that got the highest funding immediately after the world started relaxing the COVID restriction. Now, when you look at Africa as a continent, total investment of about $5 billion in 2021, of which $3 billion went into fintech businesses. Then I will come back to Nigeria with an investment of about a little over $1 billion, and the fintech took 79% of that. That's about $800 million. So from a funding perspective, we could see the journey, how it grew from pandemic year of 2020 up to 2021, 12 months after pandemic. We saw how the investment went into fintech businesses. That shows the huge opportunity which we expect in 2022. That shows the perception of venture capitalists. That shows the perception of investors. That shows the perception of where people want to put their fund. Then I will go into the market perception. I call this perception because I can call a fintech a $1 billion business. If that's my perception, if I value it as $1 billion business, automatically that's the value of the business. A lot of financial analysts might not accept it, might not take it, might not agree with my perception. But we know most of the fintech businesses are based on perception. And most times the perceptions are always very right, because we saw the perception of Amazon, even when they were declaring losses. We saw the perception of those who stake in Facebook, those who take a lot of stake in Tesla, etc. So at the moment, we have about 30 decacorns. Decacorns are businesses that are valued over $10 billion. And 30 is just almost 100% growth from what we have in 2020. So from 2020, another perspective, a pandemic year that everything was shut down globally. In 2021, we had the double of the decacorns in 2021. Now, when we go to the unicorns, those are the ones that are valued at, from $1 billion, but less than $10 billion. In total of about 1,058 globally. Fintechs account for 138 of that. That is a huge, over 13.8%, or close to about 13% of the entire unicorn businesses globally. When we now come to Nigeria business, we'll see from the survey done by a few experts in the ecosystem, we have a total registered, acclaimed 290 fintech businesses, of which 7 of them are unicorns. Now, why are these ones unicorns? If you look at these companies termed unicorns, Jumia, Flutterwave, InterSwitch, and Della, most of them are already playing on a continental basis. So which means that we see a lot of fintechs going continental in 2022 to achieve their aspirations of unicorn. Now, I will also dimension my conversation onto which areas are we seeing the players. Which areas do we think fintechs are going to play in 2022? From where we see, we meet an average of about probably 20 fintechs on a weekly basis, and we can easily see what the direction of the market is going, where people are thinking of putting their innovation. And we're seeing a lot of passions around green tech. That's we're seeing a lot of people working, innovating around green tech, which is quite more than what we've seen in the last 1 or 2 years. We're also seeing a lot of innovations coming on around insurance, digital insurance. I mean, we are seeing a huge opportunity. We are seeing a lot of fintechs taking the opportunity in insurance sector. Then blockchain seems to have taken a lot of attention post the announcement of eNaira, and I think a lot of people now understand and have a clearer perspective of what blockchain is all about. So we are seeing a lot of fintechs going into blockchain and creating different use cases, etc. And we can't just throw the opportunities that lies in financial inclusion away. We are seeing so many interesting innovations coming around financial inclusion, and with a very, very scary numbers that if those things come true, we think it's going to change the entire landscape. So these are the top 4 that we think is definitely going to be very impactful in 2022. If I delve a little bit into these areas of innovation, like I said earlier on, the key drivers are very, very important. Like I said earlier on, the key drivers are very important. I will take a look at the African continental free trade area as one of the key drivers we think is going to shift the journey of the fintech in 2022. I will also take the Pan-African payment settlement system as another key driver that I think a lot of fintechs are going to be leveraging on. With the new fintech framework that is being prepared by central bank and other key stakeholders, we think that will also change and drive what the fintech businesses will be looking at. And with the open banking framework, we think those are the drivers that is going to shape how fintech will play in 2022. So just to touch a little bit on to just to do a little bit deep dive, I would just say we see most of the fintechs playing around mobile money businesses. Where you can see Team Apps today. OPay got an investment of about $400 million, and we're seeing Capricorn, etc. I think that is going to continue in 2022. We're going to see a lot of fintech innovating around blockchain. I spoke about that earlier on. There will be a lot of startups creating use cases. I think I've seen quite about 6, 7, 8 of them in the last 1 week. And open banking is getting more attention. We are seeing Mono and others, and I will see a lot of them springing up across Nigeria and moving to continental businesses. And we also see some mergers and acquisitions opportunity in the fintech ecosystem in 2022. That is definitely going to happen. I mean, if it's not going to happen in the first half of 2022, I think we will see some happening in the later year. And why will I say so? Most of the fintechs that are doing so well, they are leveraging partnerships and leveraging licenses of the established ones. And we'll see some acquisitions happening in 2022. My other speakers have spoken about big tech playing a very key role. Of course, that is a very, very key driver in 2022. We've heard the announcement of Apple turning the iPhone into a payment pause, and we also know what Google is doing with Google Pay, etc. So we see a lot of dimensions of use cases by this big tech into the African market. And of course, Nigeria will be the first point of call. Now, I will come to Africa Fintech Foundry, what we do, and how we are shaping towards the 2022 outlook. At African Fintech Foundry, we are a arm of Access Bank. And one of the biggest food that you make a fintech successful is the market. So with an Access Bank as the big brother and the big father of AFF. It's a huge opportunity for fintech businesses, and every fintech business we meet, they try to see every opportunity that they can build with a 50 million customer base bank that spreads across about 12 countries, United Arab Emirates, United Kingdom, and then more to come, with representative office in China, India, and Lebanon. And these are opportunities that the fintech businesses need. We also have digital assets that can enable most of the fintech's digital capability. I mean, because if you look at the fintech businesses, most of them, they pick one item and they try to leverage on infrastructure, they try to leverage on partnerships, and those are the key drivers from Access Bank that is going to help a lot of fintech businesses we are working with in 2022. But we are deliberate and we're very strategic in our approach. And how do we execute? We have a collaborative strategy where we create partnerships with fintech, with startups, and at the same time, we run an accelerator program whereby they come into our accelerator for 17 weeks. They go through all the organizational structure, how to set up a company, which is one of the biggest weakness of fintech businesses. A lot of intelligent solutions come up, but there's no governance, there is no structure, and those are the things we offer from AFF in terms of building your corporate structure, building your corporate governance. And by the time they are out in 17 weeks, you see a very, very ready for investment businesses. I mean, for the ones we've accelerated, we look at their numbers before and after the accelerator, and we see most of them doing extremely well afterwards. And I spoke about our accelerator program, and over and beyond that, we run also an ecosystem program. We run a quarterly ecosystem roundtable where we bring in the startups, we bring in venture capitalists, we bring in speakers, and we are also deliberate with diversity. We run Women in Tech program and also try to bridge the gap of gender imbalance in the fintech ecosystem. I try to make my presentation as short as possible. I think I have just 5 minutes, and I'm happy to take more questions. I can go deep dive offline for those that needs to talk more or needs more information from me. Thank you.
Right, Daniel Awe, thank you very much. MD of Fintech, Africa Fintech Foundry. Thank you for sharing your perspectives with us this morning. One of the things you said is to the effect that more fintechs will go continental in 2022. Of course, you shared some information and data with respect to how well fintechs have done, including the 7 unicorns from Nigeria out of 290 fintechs. That's really awesome. And we're very proud as a country of those entities. Obviously, there are questions that are going to come in for you, so please stay back so we can wrap this up with answers to those questions that will be directed to you. Thank you very much, Daniel, for your time. We'll just go straight to take the presentation or speech from Yinka Edu. Yinka is the partner UUBO, and Yinka will be speaking on legal and regulatory outlook for fintech in 2022. Is Yinka with us still?
I am indeed. I'm just trying to share my slides. So can you see?
Yes,
my
you're
slides?
on actually.
Wonderful.
Yes.
Wonderful. So, so thank you very much for having me. I am, as has been said, I'm a lawyer. In terms of my practice, we advise a lot of fintechs in relation to regulation, in relation to licensing, and then also we're very active in the M&A space. So I'm just trying to run these slides. So you're going to get from me the lawyer's perspective in relation to the outlook for 2022. So, great. So what I have done is to look into the crystal ball and to make certain predictions for the year. Now, clearly, I'm a lawyer, so number one for me is regulation, 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 aka make sure you have a lawyer in 2022. I don't know how many people were tracking what was happening with the regulators in 2021, but certainly I think that their attitude to regulating this space has changed. I think that they are very much actively participating, anticipating the activities within the space. You know, as children, sometimes if you didn't want something to happen, you'll close your eyes and pretend it wasn't happening. I think the regulators have very much opened their eyes now, and we're going to see a lot of regulation. Regulation in 2021, I would say it was a bumper year for regulation. I'm just going to mention some of the regulations that the CBN brought into place, and that's sort of the end of 2020 to the beginning to 2021. And we saw things like PSB licensing, open banking, QR codes, the regulatory sandbox. They restructured the whole payments licensing sector. And then also something that was very telling is the Banking Act, the BOFIA, that came into force specifically mentioned fintechs and the regulation by the central bank. So certainly I think it triggers and signals a change in attitude, even where they felt that they were not regulating the space. So for example, in relation to cryptocurrency, they took other steps which had an impact on the space. So by saying that you can't operate banking services to crypto exchanges, they effectively were restricting that ability, even though they didn't specifically prohibit cryptocurrency. SEC was the same, the Securities and Exchange Commission. They had the start and stop in relation to cryptocurrency, initially indicating that they were going to start regulating that space, and then it went quiet when later on. They had introduced regulations in relation to digital sub-brokers and actually made statements regarding some of the operations that were happening. They had new regulations on robo-advisors, crowdfunding, and they finally started their own incubation program, which is similar to the CBN's sandbox. So I think this year, a lot of regulations. I think you need to be ready for it. I'm happy that some of our other speakers have picked up on that. I certainly think that 2022, you need to be ready to be regulated. Another issue that was picked up is the focus on digital lending practices. I think Lauren mentioned that the issues, and I saw some of the questions, some of the issues that are coming up are interest rates, data protection, and also obviously collections. There's been a lot of drama around the collections and what's going on. And I know that it's terrible and it can actually get worse. My view is it can get worse. And so regulators are going to look into it. I had read somewhere many years ago about, in some other jurisdiction, not in Nigeria, where when people were looking to borrow from some of these unregulated lenders, they were asked to send naked photos of themselves. And if you didn't pay on time, then those photos were shared with everybody in all your contacts. So certainly it can get worse, but we expect to see the regulators looking at this year. We know that the consumer protection regulator, the FCCPC, has made some indication that they'll be looking at that, as well as the data protection NIDDA as well. I know CBN would also like to do that, but many of these lenders, in fact, the lenders probably that are most guilty of this are not regulated by the CBN. Okay, so I've got here partnerships and disruption. Clearly, if any year, you would expect to see partnership and disruption in the list of predictions. So I'll try and be specific here. In relation to partnerships, I think that the huge impact of the open banking regulations will be seen. We're going to see a lot of innovation around that. Also, I think that the PSBs are now sort of coming into their own, the telcos, in relation to what they'll be doing, because their license allows them to hold, to receive deposits and they have the huge market. I think they're going to have huge sums of money in deposits, and they'll be looking at ways to leverage that money. They're not allowed to lend. And so they'll be looking at partnerships with various other fintechs and different ways in which that they can utilize those funds that they'll be holding. I think they will also be one of the main key drivers of disruption. I think that they're going to have a huge impact on the MMOs, the mobile money operators, who have the various, who are operating wallets. I think that the competition is going to drive a lot of innovation in that space also. Blockchain technology, that's also been mentioned. I think that there are many use cases. And as somebody mentioned, I think the e-money, e-Naira has actually opened people's eyes to some of the things that you can do on the blockchain, and to understand the difference between blockchain and cryptocurrency. I know in the course of last year, there was a time when it was said that the company's registry was not allowing companies to register who had blockchain as part of their objects or doing activities involving the blockchain. I think that understanding has been clarified. And so I expect to see a lot more in different use cases. Identification is a big one, KYC. I think Odun also mentioned identification as a big one. I think titling, real estate, and so on. I think we'll see a lot in that space. I'm hoping that we will. And then I've stuck my neck out, and I'm predicting at least 4 new unicorns in 2022. I believe that what we have seen, the investments, the M&A activity that we've seen in the last year, certainly is driving interest in that area, and I certainly expect to see it. I've seen at least one announcement this year of a new unicorn, so maybe my 4 is even being pessimistic. I'm hoping, in addition to that, that we will see a lot of unicorns that are by women-led fintech businesses. So I'm hoping that that is something that we'll see this year. So on the other side, these are things that I don't think will happen in 2022, but I hope they will. But I do think that they are things that in the fullness of time will come to pass. So one of them is a change of position of the regulators on cryptocurrency. I know that many of us were hoping to hear, and I've even seen it in the questions, but I knew even before I came on this session that many people are hoping that we will see a change in attitude to cryptocurrency. I think that will come, but I'm not sure that it's coming as quickly as we had hoped. I know that many people, certainly many people in my firm, are fasting and praying that this will come fast. And all I will say is keep fasting through 2022. I'm sure that maybe by 2023, we'll see a difference. And those of you that were fasting for the end of the Twitter ban, you've already seen the fruits of your labor, so please continue. So I think that cryptocurrency will still be discouraged, should I say, in the course of 2022 by the regulators. But obviously, I don't think that is stopping people using, investing, and also, just taking advantage of the opportunities that it creates. Open banking system. Again, I certainly think the open banking system is going to have an impact. What I'm hoping for, which I think will take a little bit more time, is for it to be more open within the financial services sector. So not only with banks and payment systems, which seems to be the focus of the CBN regulation, but also expanded to include pensions and insurance. It's expected to have a huge impact in relation to financial inclusion. And I think that pensions, particularly micro pensions and micro insurance, are also important in addressing some of these issues. And so it would be great if something more specific, wider would come to pass. But I think we'll have to wait a little beyond 2022 for that. And don't shoot me. I've got here the startup bill. I think that we are all looking forward to the enactment of the startup bill into law. The startup bill is going to be very important for the ecosystem and for this whole space. It'll provide many incentives, both fiscal and financial, to startups, and it'll also help to attract a lot of investment into the sector and into Nigeria. However, I don't think that it'll pass this year, or if it does, probably not in the form that we are hoping. And I say this because I think the body language and its sense that we get from government this year is that they're not really looking to create new incentives. That was at least the sense I received from the Finance Act, which was passed at the end of the year, where some incentives were removed and some incentives, particularly in the capital markets, were allowed to lapse and were not renewed. So I don't think they are actively looking for ways to increase incentives and reduce the tax burden. So I think this will probably be maybe 2023. But we're leading up to an election year, so you never know. I hope I'll be proved wrong on that one. The NGX and FMDQ are also looking to attract sources of funding or to support funding for fintechs. I certainly think that it's a laudable initiative. I know that the NGX made an announcement about a NASDAQ-style platform, and I know the FMDQ has their private bonds initiative. And all of these, in the fullness of time, will certainly support the funding for fintechs. I believe that in the course of this year, they will continue to look and refine those offerings, and that towards the end of the year or by 2023, we will be able to see the impact of that. Finally, I have the Pan-African Payment Settlement System, the PAPS, which is groundbreaking and really will have a huge impact on the system. It is a system by which you can transfer within African countries, payments within African countries. And this is something that a lot of fintechs have recognized over the years. A lot of fintechs have sought to provide solutions for this. And so they will certainly be impacted by this new initiative, which also comes out of the whole initiative by the Afrexim Bank for trade, inter-Africa trade. CBN has already issued their regulations on the PAPS as at January, but I believe that it'll take a little bit of time. And so the fintechs that are going to be greatly impacted by this can rest easy, I think, for 2022 and look at ways to innovate, because this particular initiative requires interaction from different states. And I believe the different African states are at different levels of preparedness in relation to this. So I think the real impact of it won't be felt until 2023. So that essentially is the end of my presentation. I thank you. I was just going to add one thing, that I saw that the Endeavor also published some predictions for 2022, and at the end they asked each participant to tell them their mantra for 2022. So I thought I'd share mine. So my mantra for 2022, consider it self-serving if you think, but is please have your lawyer on speed dial. Thank you very much.
Have your lawyer at speed dial. Thank you very much, Yinka. And you're right, actually there's a lot happening, especially with respect to partnership and acquisition and all of that in the space going forward. So fintech, players have to be very, on top of their game, right? Thank you very much for that. It's also, amazing that, you share the thoughts of the industry with respect to cryptocurrency. It's not sustainable. I mean, the over-regulation or ban is not sustainable. But you did say that in your opening is regulation all the way. Regulation is what we should expect in 2022. Meanwhile, I mean, there's been thoughts around the issue of over-regulation already. So question is, how do we balance, those sort of developments? But we'll come to question and answers. I'm sure there'll be a lot of questions for you at the end of this segment. Again, thank you very much, Yinka Idu. Yinka Idu is the partner with Doma and Bello Sage. Thank you very much for that perspective. We'd like to now go straight to Nkebet. Nkebet is the Senior Director of Visa, Sub-Saharan Africa. Nkebet will be talking about payment and the payment expectations for 2022. Thank you very much. I can see Nkebet is ready. Nkebet, the floor is yours.
Thank you very much. Can you hear me good?
Yes, we can.
Fantastic. Good afternoon, everyone. And thank you, Yinka. It looks as if you were spying on my on Wednesday, but that's okay. So I'm just going to have a discussion, right? I'm not going to present you. So I can't top the pretty slide Yinka just gave. So I'm just going to talk about Visa's perspective and my perspective on payments in the next 5 minutes or so. So over the past 12 months, digital transformation has continued to accelerate, the way we see payments. COVID did a huge one on everyone, right? With the pandemic and all the changing behaviors, changing the way people viewed payments, disrupting some industries and making some industries thrive. Even as society starts to normalize, and restrictions lifting in various countries, the UK, some parts of Europe, Nigeria, I tell people, I said, Nigeria, there's no COVID in Nigeria, just leave it, protecting us all. When I see, when restrictions like this, offices reopening, we see that some habits that people adopted through the pandemic will still be sustained, right? Online and offline spending has been transformed, whether we like it or not. Businesses that were brick and mortar and only had shops that they were using. I went into a supermarket the other day, and when I was checking out, this is a hypermart. When I was checking out, the lady asked me, "Do you have our app?" And I was like, "Oh, you have an app now?" So shops that would not have thought about that have moved, into that. And what we've seen even happen across Africa, as Visa, we launched contactless in Ghana last year. This has, and we did that in South Africa as well. People with COVID want to move into touch-free transactions. We want to have a situation where we are not giving our cards to the guy at the fuel station and then having to sanitize it after, or sanitizing our fingers after we touch the PIN, the PIN pad on the POS terminal. So contactless payments has grown, and we see it growing. And once it's launched in Nigeria, it's just going to grow, because that's what pandemic has done. In the midst of this, there is still the uncertainty and unpredictability. But one thing that is clear and we cannot run away from is that the future of money is digital. The pandemic accelerated this change. There were some things that we were looking to as a 2025, 2026 future of commerce that has now been accelerated by the pandemic. So I'm just going to talk about some interesting things that we see that are going to happen in the payment space in 2022. The first one I'll talk about is embedded finance. I call it embedded finance. When you look at the way banks have not been disrupted, but the way payment has shifted from being just in the banking sector as finance to now allowing any fintech or any company to become a fintech offering financial services. And these companies come with better customer experience, sometimes lower costs. So the things that you were probably not happy with your bank, you're having it now with a fintech. You don't have to go to the bank to queue for a card. Perhaps you can have it delivered to you. With this happening with payments from a consumer perspective, what I see, or what we see as Visa coming to play soon, is this shift also happening with the merchants. So we expect to see that more and more merchants will be exploring how financial services will complement their revenues. So gone are the days when you will hear merchants say things like, "Oh, I really don't care how my money is paid as long as it is complete." You will have merchants saying, "I want to see how some other financial services will help me boost my revenues." And so we will start to see new banking as a service providers helping to create these new use cases and create revenue streams for both merchants and consumers who want to have a different way to grow their revenues and to grow their finance and to see how that moves. The second aspect is the metaverse, and this is always very interesting for me. A lot of us, and Yinka talked about crypto, the lady from Piggyverse talked about crypto as well. Metaverse is actually one of the things that have interested us lately. The metaverse is creating a new shared space between different digital worlds. So they're about blending virtual and augmented reality. So whether it is selling these days, selling Nike selling virtual sneakers. The other day was Ariana Grande's concert in Fortnite, or the other day was a replica of Florence Gucci's garden in Roblox, and which is where if you have teenage children, or I even know some adults who play all those things, this NFT, the metaverse is moving this way. So we're seeing a third space of virtual economies allowing the sale of virtual goods. So whilst this metaverse presents enormous opportunities and creates an entirely new sales platform, it's now left for the fintechs, and especially in Nigeria, to see as regulation allows how this would be integrated in the emerging forms of commerce. But the big question would be, how would we do that in the comfort of safety? And, you know, as Yinka said, making lawyer your friend, so you're not going against regulation. Another interesting one is buy now, pay later. I was listening to Fair Money, you know, talk about lending, and that's a very interesting space. But what we've seen grown in pandemic is buy now, pay later. So following another year of the rise in e-com adoption, because people have created habits that are not going anytime soon, consumers' interest in installment-based solutions have rapidly increased. So gone are the days when you had to work only in a bank to be able to have installment payments, so present your check and pay installmentally. Buy now, pay later is changing that. So offering unsecured credit to customers, but in different terms of accessibility as well as placements of the service itself. So today we see buy now, pay later services available even online. And it's a trend that we know is going to move into Nigeria pretty soon. When I say pretty soon, in the coming months. So whether it's online or in physical stores, we would see that coming. However, as a fintech, to be successful, you know, with doing a buy now, pay later solutions, because we've seen people who have tried to do this, some have worked, some have not. It's to carefully balance your cost of funds with the ability to access credit risk. How do you manage bad debts? How do you ensure somebody does not come and start an installment to buy a TV or a phone, and the next thing he's moved to Canada? You know, how do you cope with the increasing regulation? So as fintechs, as a fintech moving into this space, these are the things you have to measure. Focus on your partners, see which aspects of the industry you're going to move on to create these buy now, pay later services. I'm not going to talk a lot about crypto because we flogged that, but as Visa, just what we're doing in crypto, blockchain, you know, that whole space, digital currency spaces, we have grown a lot, and we've grown with the crypto trend. Across the globe, what we've been doing is helping central banks to formulate central CBDC regulations, working with banks to implement stable coins. We've also gone as far as even globally in countries where crypto is allowed. You know, we've had partnerships in integrating crypto into mainstream financial services, whether being able to access your crypto balances on a Visa card. We've done all that. I'm sure you can find it online. The last thing I'm going to talk about is open banking. Yinka talked about open banking, but from where we sit, we believe that data presents a key ingredient in a truly personalized offering of financial services. So as a customer, it is paramount that I'm able to choose how to layer my information. So which information am I willing to share with a third party? How secure am I willing to make that, you know, look like? Am I willing to share this layer of information to this certain third party, or I'm going to not share that? And those are the kinds of mixed kebab or mixed breeder that open banking gives. We're still really new on open banking in Nigeria, but this year we believe open banking with the rich suite of APIs would bring in those innovative financial solutions. So we would have, as we look at regulating open banking, or as we look at creating the open banking, which has started, with Mr. Olowe, creating that standardized approach, we see that fintechs are going to come in with new flavors to allow customers have control of their data, but also allowing them have enough data that they can work with to enrich experiences. So I'm going to close with saying that as technology and consumer demand continues to disrupt the markets and prompt new approaches for financial institutions, not just financial institutions, for fintechs, for merchants, it is really clear, this is February, it's clear that 2022 will be another year where we will see large-scale changes. We expect to see further disruptions across commerce, across money movements, across innovation, and what's most importantly, innovation will continue to thrive in an open environment. And we believe when all this is done, it will truly unlock the power and potential of digital money. And Visa is here for it. I mean, any fintech who really is doing fintech in Nigeria is associated with Visa. We have a whole fintech team. We're leading those discussions where we have open APIs that are available for fintechs to plug into. We are here for the ride. Thank you, Mr. Yinka.
All right, thank you very much. Kebet, thank you for that. Those remarks for sharing your thoughts. I think at the center of all of this, like you said, and I agree totally, is transformation, digital transformation, and you've given us different dimensions that we will be seeing, going forward with respect to how technology and consumer demand is changing the face of payment, and how products such as crypto, open banking, and the diverse API, technology is going to change even further the face of payment. Talk about metaverse and how interesting and exciting that can be, particularly with respect to data privacy and so on that you spoke about. So thank you very much for sharing, those thoughts. We really appreciate it. I'm sure the audience that we have, taking notes, and I'm sure we'll come to you with questions at the end. Thank you very much. So finally, ladies and gentlemen, we have come to the final presentation and speaker of this slot, which is Outlook 2 of the Fintech Nigeria program, the Learning Series 22. And here with us to do justice to the issues around cybersecurity and data privacy, which has been recurrent actually in most, if not all, of the presentations so far, which then alludes to the fact that this is very important for fintech. Is a very sore point that we need to be very mindful about, and I'm sure the stakeholders are doing justice to that. So with us this afternoon is Dr. David Isiawe. Dr. David Isiawe is the President, Information Security Society of Africa. He's also the President, the Nigerian chapter, and of ISAN, that's ISAN, and then he's the General Manager of EcoBank. David, it's always a pleasure to have you. The floor is yours this afternoon. Thank you very much.
Thank you very much, Yinka, and good afternoon, ladies and gentlemen. It's indeed a pleasure to be here. I think, Yinka, you actually made my job quite easy, because the benefit of speaking last is the fact that, when you have erudite speakers lined up on a day like this for all of these different pockets of fintech-related matters, at the end of the day, everybody talks about data privacy, everybody talks about the security to some extent. So I think maybe I could just take 1 or 2 minutes to do a wrap up and then we proceed. Cybersecurity is fundamental in the fintech space. And indeed, if we want to unlock the full potential of the digital economy, then cybersecurity must be appropriately prioritized. This is a view that we have always held, and it was re-emphasized just recently by the World Economic Forum, a couple of weeks now, just 1 or 2 weeks ago, all right? And indeed, despite the growing recognition of cyber risks, what has been found is that the key decision makers in organizations in Nigeria, Africa, across the whole world seem to have a gap in terms of the business leaders and the cyber security specialists or practitioners or executives. And so there is a problem of appropriate prioritizing, all right? For instance, integrating cyber risk into business strategy, integrating the cyber leaders into the business processes, and with the whole objective of appropriately prioritizing cybersecurity between leaders on the business side, and the cybersecurity executives and organizations, we are still not on the same page. So there's a whole lot that still needs to be done. If you take a step further, just go back a few years, 5, 6 years ago, we used to think in the cybersecurity space that, the target of $3 trillion as a cost of cybercrime globally was something of a dream. Oh, it may not come true, but by 2015, the threshold had been crossed. And in the past 5 to 6 years, that loss has already doubled to $6 trillion by last year. And it is expected, it's been projected that in another 3 to 4 years, we're going to have over $10 trillion lost to cybercrime globally. What it simply tells us is that the growing rate of digital transformation around the world is actually facilitating criminal behavior amongst different categories of people, those who are cyber aware, those who are proficient in cyber related digital activities, and even those who know very little or nothing. So what we have seen here is a complete paradox. In those days, finance students, students of business admin, economics, and so forth, they used to be taught that high risk gives you high returns. But in cyberspace, in the digital space, on the cybersecurity and cybercrime front, it's the complete opposite. With very low risk, an individual sitting in a room with just a modem or a telephone with 100 naira, 200 naira credit and data connected to the internet, that individual can move millions of dollars if the institutions are not appropriately protected. And what do we have in terms of the Cybercrime Act that we have in Nigeria today, for instance? You see the cost of damage, see the damage done to organizations by cyber thieves, and then you juxtapose that with the sanction, the punishment. They are poles apart, completely divergent. So it's a big problem, and it's not a Nigerian problem. Neither is it for Africa alone, but cuts across the whole world. On the data protection side of things, if you look at countries, the heat map we see there for Africa shows the status of data protection legislation across Africa. There are essentially three buckets. Countries that have legislation, which is good, and then those who have draft legislation, their laws are not yet passed, or the bills are not yet passed into law, and that's where Nigeria actually falls in. And then there are countries, the very red ones, are the countries that do not have legislation on data protection at all. But one key advantage of a data protection legislation is that practically all businesses would be forced, whether they like it or not, to put in place structures and operations to ensure compliance. Never mind in Nigeria, NIT came up with the Nigerian Data Protection Regulation, and that is good because today all organizations that are eligible must do the reporting. And I believe The next cycle of reporting is next month. So all eligible organizations by now should be either going through an audit, or they should just be completing their audit to file their data protection regulation returns to meet that as required. 2021 was a year that there was a lot of activity in cyberspace. Again, that was exacerbated by the advent of the popular COVID-19 pandemic. Accelerated digital, and with that came all kinds of problems in that space. So we see, for instance, that 86% of organizations had at least one user try to connect to a phishing site, which is basically a social engineering type of attack. We'll talk about that in the next 1 or 2 minutes. 70% of organizations had users that were served malicious browser ads. That was common. You power on your phone or your PC, you see those ads coming up, and they never stop. All right. Approximately 70% as well of organizations experience some level of unsolicited crypto mining. A lot of people do not know that their systems are being used illegally to mine cryptocurrency. A few of the speakers have already spoken about cryptocurrency in Nigeria, outside of Nigeria, etc. But sometimes your telephone is very hot, your system is extremely hot, and you have not even used it for anything. You may not be so sure that it's actually being used illegally by somebody sitting somewhere, anywhere, Nigeria, Africa, the rest of the world, mining cryptocurrency. It's a big problem, and it is spreading. Almost 70% of organizations' technology infrastructure being used for this kind of thing. And then 50% of organizations encountered ransomware-related type of attacks. Ransomware is another Hydra-headed problem that we have in cyberspace. And again, we'll talk a little more about that in a bit. Going forward, what do we expect to see? We should see a trend where organizations move from just being cyber safe to being cyber resilient. So there should be that shift from cyber defense to cyber resilience, which is critical. I'm sure we're all aware that it is no longer if an organization will be attacked. I can confirm to you across the world, it is now a matter of when. So when that attack occurs, what happens? Organizations, fintechs, everyone, both mega tech organizations, small tech organizations, everyone needs to be resilient. When you are attacked, you should be sure that the outage can be contained, you respond appropriately, and be able to recover and commence your business again, so that your customers do not suffer too long. Because a lot of history has shown, and experience has shown, that cyber attacks have left many organizations dead. They couldn't recover, and that's the problem of just being cyber defensive without being cyber resilient. We also expect to see more communication from the practitioners, like the CISOs, with the business executives with regard to the risks and the appropriate response measures that must be in place on an ongoing basis to ensure safety and security and cyber resilience. I mentioned social engineering earlier on. This is a big issue. It has been on for many years, and it's just going unabated. About 90% of the people in the world cannot even identify a phishing email. So you can see, phishing email messages are sent almost every minute. Millions of them are going around. People are just clicking on the links and falling prey, and all kinds of damage is being done. Also, a 151% increase in ransomware attacks were recorded in the first 6 months of 2021 compared to 2020. And having become rampant in 2021, ladies and gentlemen, we expect to see more organizations, private, public alike, being targeted by ransomware in 2022. Now, in Africa, generally speaking, a lot of our countries and our citizens all have access to mobile technology as opposed to other forms of connectivity, and which is not a bad thing on its own. The IoT is becoming a big problem, the Internet of Things. The vulnerability has always been there. And some of us, we sleep with one eye open because of this particular type of vulnerability and attack threshold or vector. What we see here is that about 1.5 billion attacks occurred against IoT devices in the first 6 months of 2021. And about 70% of fraudulent transactions occurred through mobile channels. Now, there is a particular type of attack or vulnerability of the IoT space. All right. A lot of the devices are not made to be cyber resilient. A lot of them are not made with cyber security at the back of the minds of the producers. A lot of those devices that we have, if you take an IoT, for instance, Internet of Things, even the CCTV cameras that we have, anything that is smart can actually be connected to an IoT network. So if the cyber criminals actually want to bring down a target, whether it's a financial institution, whether it's a grocery seller, like one of the earlier speakers mentioned, all they need to do is to turn all of those devices into what we call zombies, just a simple malware that is transmitted and put in each of them, installed in all of them. And then the button is clicked and you find packets, billions of packets hitting the target. It is a very serious issue that we're looking at here. And we are hoping that it does not crystallize anytime soon. We expect to see more collaboration in 2022 amongst key stakeholders. We also expect to see more regulatory focus. I think it was Yinka who had regulation on one of our slides 3 times. We expect to see more of regulation. And I think previous speakers also mentioned the importance of regulators and how the regulators are now focusing on the fintech space. We saw what happened in 2021. It's not going to be less. Fintechs will come under the hammer of regulators 2022 and going forward. So what do we see? I see a more critical role for the Fintech Association of Nigeria in bridging the gap between the regulators and the innovative fintech teams in our ecosystem. So Dr. Brima, Mr. Day, Bajamo, the entire GovCo, everyone on the platform, there is a lot of work to do on the Fintech Association side of things to ensure that the ecosystem itself does not suffer, because the regulators have a role to play. The fintechs must also be allowed to innovate. So there has to be some balance. Boards of directors will be required to play a little more critical role in ensuring that the organizations have the right level of cyber resilience as well, because we've said it already. It's not a question of if, but it is when. Also, the new trajectory of interconnection and digitalization that we have seen, which we already mentioned, occasioned by the advent of COVID-19 pandemic, we'll see more aggressive innovation on the fintech space. There will be more innovation, there will be more threats, there will be more attack. Everyone just needs to be sure that they are ready and they are resilient. Therefore, cyber resilience, we believe, will be driven more by digital transformation. We're already seeing that other than anything else. There are also perception gaps that has already been mentioned between the cybersecurity experts in organizations and the CEOs. That needs to be addressed. That is an area that the regulators are also very much interested in. And the small and medium scale enterprises, and I believe that about 80 to 90% of fintechs actually fall in this category, they are seen as a key threat to supply chains and the partner networks, as well as the ecosystems. This further underscores the need for standardization. Our fintech players have to pay attention to some basic international standards. You can't run away from it. ISO 27001, you must see what it says, what is required. As you're doing your work, you ensure that you meet the standard. What about ISO 22301 for business continuity management? Fintechs need to ensure that they meet these standards so that when they get attacked, then they are resilient and they can get back and continue their business. There are other, ISO standards, but at least the key ones are critical. Whether you're fintech, whether you're big tech, whether you're medium tech, it doesn't matter. There's need for standardization. Otherwise, we'll have all kinds of vulnerabilities or gaps that can create more problems in the ecosystem. There is an increasing need for collaboration and information sharing, and we'll see more of that going into 2022. Firms will be expected to form stronger alliances and partnerships going forward. We've talked about the supply chain disruption from the fintech or small and medium-sized space. From a data privacy outlook, we expect for 2022 to see increased data protection and privacy laws. We're expecting that in Nigeria, for instance, our own law should be signed, our bill should be signed into law, in 2022. Increased data breaches and extortion are expected to happen more in 2022. To counter all of that, as part of the measures of countering them, we also expect to see more of biometric devices being manufactured as a way of combating the online frauds. There was actually, last month, 2021, in January 2022, the Chatham House, had a session that focused on basically Africa developing economies from a technology governance perspective, and the roundtable was focused more on data privacy concerns. And we're going to see a lot of that going into this 2022. Organizations need to keep safe by using least privilege. Users on the systems, traditionally, a lot of organizations give all the privileges to the users on the system, whether they are needed or not, just in case. That should not be. People should be assigned roles and privileges just to match what they need to do their work. And then automation, I think that has been talked about heavily. Automation is key. Enforcing security policy must be made in an automatic manner. The previous analog and manual ways of combating cybercrime cannot withstand the current age and what happens, now. Organizations need to have a cyber security program, and management support is critical. What about data minimization? The days are gone when people just collect data from customers, from clients, data that they don't need. They just want everything. Those days are gone. We're heading towards data minimization, where fintechs and other organizations should only collect the data that is actually required for specific purposes. And by the way, customers are complaining across Africa because certain organizations are asking for too many data, and the customers are saying, wait a minute, I have a right to my privacy. So we're going to see more of that. And finally, businesses and other organizations must have a program for cybersecurity training and user awareness. We are convinced that if all of these are put in place, we'll have a safer, cyberspace for the digital innovation and digital services that we expect to have in 2022. Thank you very much.
All right, thank you very much, Dr. Siawe. Thank you for that brilliant show of understanding and your presentation, very informative. Obviously, big problem, obviously not a Nigerian problem, it's a global problem that we're dealing with here. We quite appreciate that. We are running out of time, and therefore we'd like to close this segment. However, we'll be able to take only 2 questions. Other questions will be shared to the panelists via Fintech NGR, and the answers will be shared to the participants at some point. So at this point, I'd like to just invite Tosin, Enyelorunda, and Yinka Edu. Those questions have been sent to them already, so that we save some time. Please go ahead one after the other. Tosin first, and immediately after that, we can take Yinka on the response to the questions. Thank you.
All right, thanks, Adeyinka. The question for me here is, with increased use case around metaverse becoming quite pervasive globally, what do I think about the Nigerian and African fintech space if they would leverage this wave in the future? My answer to that is that, see, ultimately, businesses are here to make money. That's it. So if NFT, if metaverse, is blockchain is going to make money by providing some value, either real or hype, and you're going to make money from it, we're going to see people to take it up. So I think, and of course, they will start finding ways to solve problems. And Nigerians and Africans are some of the most resilient demographics of people around the world. So yes, I think you should expect it. It's a different conversation, however, if you determine the kind of value that comes from it, if it's hype or if it's interesting. I think it's a combination of both. I think there are interesting value there, but I also think that, as usual, this domain of products also have a lot of hype surrounding it. But ultimately, if money is to be made from it and money is being made from it, people are going to get into it. So you should expect people, fintechs and Nigerian fintechs, to get it. They're already getting into it. So fingers crossed. Thank you.
Thank you. I will. Thank you. So the question to me was whether there's a one-stop bus for accessing the various regulations that have to do with fintech in Nigeria, that the law is very fragmented. So first of all, I want to thank the person who asked this question for giving me another opportunity to sell my market. So if you need, clearly if you need answers, do ask. But I will say that I believe that Fintech NGR has something. And I know that my firm also is developing a hub on the website, so ubo.org. But I have written an article. I don't know if it's something that maybe the organizers can share, which was basically a summary of the highlights of regulatory changes in 2021. So that might be a good place to start. That's what I'll say. But generally speaking, because there's so many different regulators, so many different sectors, they aren't generally all contained in one place.
All right, thank you very much, Yinka, for that, and Tosin for the feedbacks that you both have given. We're running, very late at this point, and we'd just like to invite my very good friend and brother, who is the Vice President of Fintech NGR, and the person of Stanley Jacob, to please give his closing remarks as we come to the end of the Fintech Nigeria Learning Series 22 this morning. Stanley Jacob, if you're there, please, the floor is yours. I yield the floor.
I think you are muted, Mr. Jacobs.
Is Stanley here?
Yeah, he's here.
Can you hear me?
Yeah, we can hear you now.
Okay, better. I wasn't muted. I think it's the system. Okay, thank you so much, Mr. Adeyinka. I'm absolutely very excited listening to all that have been said in the last 2 hours. Honestly, we are so grateful. Thank you for moderating this session. This outlook is one that has to stay, and this is a special appeal to Dr. Obrima, our Chief Operating Officer, and my boss, the president of Fintech NGR, Mr. Ade Bajomo. Thank you so much. I want to especially appreciate some of the big wigs that have made this session what it is today. First, we had the Grandmaster Michelle. Very great insights from Michelle. We had Premier ably represented. Odun shared a lot around the world tech. I like that concept around the founders funding founders. I hope we'll see more around it. And Lauren, from the lending perspective, very great insights there. Then we moved on to Outlook 2, where we had Tosin. Tosin came up with a lot, and I had the last words around whether it is real or hype to make money. But we really want to see real impact on the people. Thank you so much, Tosin, for the insight. And Daniel, our own Daniel from the Africa Fintech Foundry. Thank you. Great insight on the startup scale. Then we had Yinka. Yinka said she had another opportunity to sell her market, but very good predictions. Your crystal ball is one you should lend to us so that we can predict more. And my friend in Quebec, thank you and well done. Then to my boss, David Isiawe, you know, when David was talking and he was talking about computers being very hot, I started to feel my system. I didn't even know. Just out of impulse, I wanted to be sure it's not hot. But as usual, thank you, David, our cybersecurity guru. I don't have that much to say. I think Mr. Yinka has done justice to all the session. President has opened it, and Wale too. Thank you. Wale is part of our governing council. I just want to say thank you all for joining us and for staying or tarrying with us to this time. I hope you had the session quite insightful. Watch out for the next Outlook session. We'll be here for you. Thank you very much, everyone.
Thank you.
Thank you, sir.
Thank you.
At this point, we just come to a close, and we'll see you again during the next Fintech NGR event. Thank you very much. God bless you for coming.
Thank you.
Next. Bye.
Thanks. Bye. Thanks, Mr. President.
Thank you,
and Vice
everyone.
President.
Thanks, David. Much appreciated.
Thank you.
Thank you.
Thank you. Thank you.
Thanks. All right.
Everyone, thanks.
Okay.
Okay, enjoy the rest of the day, everybody.
Bye.